Well, g'day to everybody. Thanks a lot for joining me as at this Wednesday afternoon market recap. What I'm going to do over the next 10 to 15 minutes or so is go through the three closely followed US market indices. That is the NASDAQ, the Dow Jones. I will begin with the S&P 500. We'll then take a look at the chart of the US dollar index, and then we'll move into a couple of individual stocks on the left-hand side of my screen. Now, for quite some time, we've been speaking about, again, just to recap most recently, even as recently as yesterday, the possibility of this market coming on back down, overshooting this technical support, coming on up here at 2,800 on the S&P 500, which again was going to be that of a sort of bull trap whereby the shorts, who are overly aggressive right around this pivot at 2,800, may very well get caught out as per a market reversal. Well, of course, fast forward, rewind now to today's session. We are left with that of a hammer candlestick. You can see here that intra-session, we actually pushed all the way down to 2,766 points. We closed at 2,783. That is what is giving us, right, this pronounced lower wick at the moment. And again, it's what we call that of a hammer candlestick. Now, if you've been listening to me for quite some time, you'll understand that candlesticks themselves, they derive their meaning off from the correct technical location upon where it is actually showing up on the chart. And this makes a lot of sense at the moment when you combine, again, right, a lot of aggressive shorts wanting to actually short this market in the face of, again, still an economic expansion. It makes a lot of sense that there would be, a lot of shorts, or at least short triggers placed here, whereby, again, the intelligent, right, investors, or at least traders, would be jumping in to actually counter that trade and oppose it and show the resilience of this market to continue upwards. Now, again, this is the first major bullish reversal signal that we have seen, all right, show up around this pivot point. We have seen others in the past, or at least early reversal signals, but I just wanted to show you this on the oscillating indicators. You can see here the Stokes again pushing for the second time into very short-term oversold territory. We're starting to register a little bit of divergence on the RSI, and the MACD again trying to accelerate right further away from the neutral line. But again, this is a little bit of a misleading signal. Pay attention to the RSI. It is the most important at the moment. But above all else, again, just to recap on the candlestick front, it is that of a hammer candlestick. And it's also potentially, we've been speaking about this also most recently over the weekend, the difference and the possibility of exhaustion gaps. I'll just write the letter E on my screen versus that of continuation gaps, okay? And we were speculating that potentially this was going to be that of an exhaustion gap to the downside, which was going to essentially finish that of this correctional, right, wave that we've been anticipating for quite some time off from this resistance area. Again, it's bordering on that of a month at the moment, or really for the majority of May. Here we are. You can see we sort of peaked on up here at 2,950. Again, we're down here at 2,783. We'll see whether or not this has got any legs or any substantial follow through below that of Wednesday's candle. However, at the moment, again, there is a lot of evidence to suggest that we're getting closer to an exhaustion move whereby the sellers are going to lose all of their steam, or what is left of that of sort of the supply capacity before, again, right, the intelligent technical chart traders are buying, when unfortunately probably a lot of the majority are sort of succumbing to a little bit of the sell frenzy and the panic at the moment, or at least the natural fear that's beginning to show up after the market itself has gone into this, right, month-long sort of correction. Pay attention to this. This is a very big development. And I just wanted to give you, right, advanced warning. This is not the first time that I've spoken about this. Again, I began speculating about a move like this back in the month of March, if not very early in the month of April, whereby we were looking at the market essentially getting up into this resistance, either breaking out and continuing, which was the lesser of two, even though the CCI and the ADX at the time was beginning to strengthen, or whereby we were essentially, right, portal number two or doorway number two was that we overshot the support, and then we saw the very strong, reaction and continuation in the upward direction as well. So we'll see whether or not this portal plays out, but I'm warning you right here and now that that is a very interesting signal showing up as at today's close. Now, again, on the Dow Jones Industrial Average, surprise, surprise, similar candlestick. It is, again, technically speaking, a hammer at support, showing up right at the psychological round number of 25,000. What makes this even more interesting is that, again, we've overshot the short-term support earlier in the month of May, but also we've overshot the support on two occasions, taking us all the way back to the month of March. So again, it looks as though, technically speaking, for the untrained, sort of unskilled eye, that we are technically making a series of lower lows, that we have technically actually broken below the neckline. But be very careful if you find yourself wanting to short the market right now. It is very dangerous, in my humble opinion. Again, potential exhaustion gap We're trading right on back into, again, the sideways moving simple moving averages, although we have overshot them. It's just generally a rough vicinity as to where potentially things could slow. We're below the exponential moving averages, but largely we are still moving sideways. So again, it negates any real sort of trend trade at the moment, simply because we are not in the trade. And again, when you pay attention to this on the industrial average, we are setting up a little bit of divergence on the RSI, technically on the stochastics as well. However, again, considering the net loss on the market down 221 points, however, a very abrupt sentiment shift intra-session, you can see again the momentum still firmly is to the downside, because the MACD hasn't, of course, calculated a shift in daily changing price to the upside at the moment, given that we closed down another 221 points today on the Dow Jones. But we are seeing a little bit of life come back into these markets, even in the face of still technically, relatively speaking, bearish conditions. The NASDAQ, the final of the three markets, it doesn't have that similar candlestick as at Wednesday. It's more so that of an engulfing candle, but we still have this open window. And again, with the continuation of these dark candlesticks now for 4 sessions, we're still yet to actually break below, right, roughly 7,500. However, we still have broken below that of that really late March high swing low at the time. So again, technically speaking, we did hold it temporarily, but now we're back down below it, testing 7,500. So when it comes to, I guess, the bullish or the potential, right, the likelihood of bullish continuations and the potential of a whipsaw for the aggressive shorts around this pivot down here, the S&P and the Dow Jones Industrial Average are looking quite good. Now, again, if you want more information on that, have a look into that pro class. It's recorded. It's up online at the website. Follow down below in the link, and you can sign up immediately and go through that 90-minute class, which I do each and every Saturday for people in that analysis class. Now, continuing with the US dollar, have a look at this. We've got 3 white soldier candlesticks. Again, we've sort of been testing and toying with this upper resistance area, just shy of really 98.30. We've got up above it on 3 occasions, albeit very temporarily. Here we are, we're just below it again, 98.18, but this is a very strong bullish continuation. We've been speaking about this repeatedly, right? We're coming back up to this resistance area, and every time we've sold off down, we've created that of another, right, higher low. So again, this has been the pressure cooker. And again, over the past number of weeks, if not months, we've been comparing the state of the US dollar being in a very sort of range-bound, choppy, sort of accumulative trading environment or pattern to that of the broader US market indices, whereby, again, short-term, people can become very deflated on the bearish swings in price action. But what they're failing to understand is the larger picture. And the larger picture is still very much so firmly to the upside. So again, when you think of the US dollar, right, and what it's currently doing, it's sometimes, or at least not recently anyway, it's been a fantastic currency pair, or at least the currency index itself to trade, especially through the use of options as well. But more recently, it's been a little bit of a pain in the backside. And again, there are parallels between the sort of non-committal, the whipsaw sort of nature of the US dollar, comparing that to the actual state of the US equity markets as well, or at least the indexes or the averages. So again, it's continuing the trend direction. Personally, looking at this chart, we're looking at this coming up to 99.88 and then ultimately up to 103.38. There is a chance that we come all the way back up to about 112 on the US dollar index. This is going back to this very big channel, a sort of descending channel, whereby we've got that upper target up here at 112. This is going to probably be a multi-year target. But as it stands, we're still holding up above the primary bullish trend line. And the next target is the psychological round number of $100 per share. Now, we haven't necessarily seen, as at the close on Wednesday, this immediately trickle through into all of the companies that we follow. However, I just wanted to point out a couple of interesting things that I'm seeing. COP, you see how we've got this shorter term lower low in price. If you have a look at the oscillators, we are setting up across the board divergences, not to mention the white candlestick today, whereby, again, all 3 of the markets had a negative print. So this might be some form of, again, a failed continuation gap printing that of bullish divergence. And if you map it out into the longer term time frame as well, you can see that we're still creating, technically speaking, a series of higher lows as well if we were to set up that of a decelerating fan line as well. So again, you can see this setting up or firming up on the MACD, firming up on the stochastics. Interesting signal. I'm not going to bring down the bull trigger or the buy trigger yet. We'll give it another day or two, but pay attention to that because that was a relatively speaking interesting candlestick setup. Walt Disney, again, if I push the number 6 key, we're getting very close to the Bollinger Band squeeze. Pay attention to this. This is going to break sooner rather than later, and that is going to be a very exciting trade. All of these trades, by the way, Google, we've been stalking on the way down, so we don't have a long trade in these stocks yet. However, based on what we believe is going to happen on the US market indices, whereby they are going to set up a reversal and a continuation to the upside. What we've been talking about, essentially in a nutshell, is stalking the trades and bringing down these bullish entries when they are ready. So I'm going to do such a thing on Google. It's being changed down to 1,160 at the moment. IBM, we're not in this at the moment. It is looking to actually break back down to this gap. But again, this is going to be at the whim of the NASDAQ. So whatever the NASDAQ does, IBM is going to follow. That's why I am essentially reluctant to actually short this. Think about Netflix. It's holding up quite nicely in the face of a market which is continuing to sell off. So again, it's holding support. The base is building. And once these oscillators, right, the pattern definitively firm up, it's going to be very exciting once that stock gets moving. Apple, again, you can just see how oversold we are on this particular stock. Again, we're going to bring down these triggers, but I'm not going to do it on Apple at the moment. Amazon, you can see as well. I'm going to change my template so I can remove those oscillators. And Boeing Airlines, you can see how it's sort of stabilizing and holding, right, the break upon which a lot of people were probably thinking that this was going to absolutely nosedive below 360, which it simply hasn't done. It's only trading at 348.80 from the original breakdown at, again, 360 or 355. So we're looking at this as a continuation, again, bullishly. Do find ourselves a little bit contrarian still, but I think the majority are soon going to figure this out and jump on board with our direction that we've never really sort of diverged away from. And it has been painful in terms of waiting, but you have to wait for the market to actually turn during these correctional types of moves, which as of late anyway, they have been sort of lingering a little bit longer than ideally we would, ideally want them to. But that's just the part and parcel of trading the financial markets. As long as you're not trapped and as long as you're not placing losing trades on the downside, if you are in a bunch of long trades still, you will be paid off when the market sentiment shifts. And just to sort of sum this up, there's a good chance, right, at this location, it may not happen tomorrow at Thursday, but at some point very, very soon that we are going to get that definitive shift and the continuation to the upside as well. All right, so that will do us. Again, if you want to jump into that analysis class, the Pivot Point Pro class, I encourage you to do so. The link is in the description box below. Other than that, everybody, enjoy your Wednesday evening. I'll be back with you most likely on Thursday for another market recap. Otherwise, I will see you in that pro analysis class over the weekend. All the best, everyone. Goodbye.